Welcome to Talk Tickers. Today, we're breaking down Seagate's blowout first quarter earnings report from October 28th, 2025. And let me tell you, this wasn't just a good quarter. This was a massive signal that the AI-powered demand for data storage is hitting a whole new gear.
Let's dive right into the numbers that lit up the tape. Seagate beat earnings per share estimates by a whopping 21 cents. That's a huge beat.
And it wasn't just on the bottom line, they crushed revenue expectations too, coming in $80 million above what everyone was looking for. And this right here is the really crucial point. They delivered a record non-GAAP gross margin of 40.1%. A number like that for a hardware company? Well, that's a level of profitability that caught the market's full attention.
So let's put those headline numbers in context and see why this quarter was so important.
As the slide shows, it wasn't just a beat. It was a classic beat and raise quarter. On top of that, revenue grew 21% year over year. We're talking about a major reacceleration here.
And the reaction was swift and it was positive. It was a clear signal that investors really understood the significance of this report.
Okay, so what was behind all this? What were the twin engines driving this incredible performance?
It all comes down to one core technology, HAMR. That's Seagate's answer to the world's absolutely exploding demand for data storage. It's a total game changer. And just like CEO Dave Mosley said on the call, AI is the super catalyst here. It's completely transforming the demand landscape for these high-capacity drives. Now, this isn't just some future story. The adoption is happening right now. We're talking major hyperscalers already qualifying and ramping up these next-generation drives. In fact, demand is actually outpacing supply. This gives management just unprecedented visibility and pricing power for the next several years.
So with all that in mind, what is management signaling for the future? Well, the guidance for next quarter was strong. They're projecting continued growth in revenue and an expansion of their operating margin to a very, very healthy 30%. And the Q&A session really reinforced their whole strategy. It's all about increasing drive density to boost capacity, using long-term contracts to lock in stability, and maintaining pricing discipline in a really tight market.
All right, let's zoom out for a minute and look at the big picture for investors.
Seagate's stock performance? It's been nothing short of spectacular. We're talking a 123% return over the past year alone. And this, right here, brilliantly illustrates the scale of that outperformance when you compare it against its tech and semiconductor peers. Just incredible.
So looking ahead, there are several catalysts that could continue to drive the stock, including more HAMR adoption and those sustained high margins.
Okay, so let's get to it. Based on everything we've seen this quarter, what's our call for the next one?
Right, given the powerful tailwinds and what seems to be flawless execution, how should we be positioned? Our call is an outperform rating. Simple as that.
We believe the market is going to continue to reward Seagate for its leadership position, and we see potential for the stock to trend towards that 280 to 290 level. Now, for a quick trade idea, with the elevated implied volatility we're seeing, call spreads could offer a defined risk way to capture some more upside heading into that next earnings cycle.
So, we'll leave you with this one final thought. With the data explosion from generative AI really just beginning, is it possible the market is still underestimating this multi-year storage upcycle? This is not financial advice.